Hello everyone, welcome back to Financial News. I'm Ron Jankowski with Channel 4 and my co-host is Paul Munico. And Paul is from Ameriprise, and Paul is going to give us an update on a lot of things that have been going on. And I'm going to give you the last minute of news that we just received from Ameriprise, and I'll share that with you, what's going on internationally as well. So Paul, I'm going to let you take it, and I want to also mention today is March 6th, 2023, and that's the effective date that Paul's going to be sharing the news on.
Thanks, Ron. And that is exactly what I'm going to do. I'm going to talk about what is expected this week. Watch for wage inflation numbers, employment, and Fed testimony. So it's going to be a busy week. Financial market sentiment remains dominated by inflation. Interest rates and interest rate expectations are being driven by the inflation picture, and stock market values are subsequently being determined by the interest rate outlook. Now, inflation is driving the bus, so to speak. So this week, we get some key economic reports that will be the last before the Federal Reserve's next FOMC announcement that we're expecting on March 22nd. Now, last Friday's employment report for the month of February will inform views of labor market conditions and the direction of wages. Federal Reserve Chair Powell also appears before Congress on Tuesday. He's going to be before the Senate, and Wednesday for the House of Representatives to provide his biannual testimony on Fed policy and the state of the economy. After several months of general improvement, inflation appears to have had a resurgence, at least temporarily, over the last 2 months. The Consumer Price Index, Producer Price Index, and the Fed's Preferred Personal Consumption Expenditure price indexes have all been hotter than expected, with particular strength in core prices, excluding food and energy. After a multi-month high in the month-over-month pace of core consumer prices in January, up 0.6%, a variety of recent price point data leads us to believe that core prices likely decelerated notably in February. Now, the Consumer Price Index for February will be released next Tuesday. Much of the recent upside in price pressures has come from the services sector, where higher employment costs and resilient demand are supporting both the need and ability of businesses to raise prices. We have data that will show that, if you'd like to see more, also that the average hourly earnings, as reported via the Labor Department's monthly employment report, have been easing in recent months, but median wage growth on a 3-month moving average basis via the Atlanta Fed's wage growth tracker has remained stubbornly high. Additionally, due to weak year-ago comparisons, we believe the AHE and Friday's employment report are likely to show an uptick in the year-over-year to positive 4.8%. That from January 17's month low of 4.4%. Again, data and charts to prove. If you'd like more information on that, we're happy to get it out to viewers at home.
Well, it looks like interest rate increases are going to continue until inflation gets corrected. Am I correct? And
that's what the
it's
Fed
hard to
is.
tell. I'm asking you a loaded question.
No, I mean, that's what the Fed's indicated. They haven't hid the fact that there potentially is going to be more interest rate hikes. So the market has been reacting to them, and more than likely will continue to. We'll have to wait and see.
Okay, as of this morning, Ameriprise shared with us the U.S. stock index futures are flat this morning after posing a 1.6% gain on Fridays, marking a 2% gain for the week. And markets in Asia are closed, mostly higher, led by Japan plus 1%. Europe is flat midday and well off the season highs. And Treasury yields are lower after big gains in February, The gains were 60 for the 10-year and 80 plus 85 for the 2-year in February.
You remember, if yields are up, bond prices are down,
down.
and vice versa. So
Always. And Bitcoin futures are flat. Gold is up 0.1% after being up 2% last week. And WTI crude, guess what? It's down 1.4%. Hopefully gas prices are going to follow that. And that all took place last week. Interesting stats for the index returns for the year-to-date, Paul. We talked about this last session. S&P 500 is a plus 5.6%. Dow Jones is a plus 1.1%, and NASDAQ a plus 11.8%.
So we're making back some of what was lost in the main indices last year. Everyone that's invested knows last year was pretty rough to the downside in these big indices, but just by the numbers you've reported, we're starting to make some of it back at least.
Yep, it looks that way. The market was up Friday again, a couple hundred points or thereabouts. So, yeah, I totally agree with you. Well, stay with us. We're going to be right back. Thanks, Paul, for the update. We're going to be back with our show called Your Money. Paul usually has a great topic to share with you viewers. Stay with us. We'll be right back. Thank you for staying with us. We're back with our show called Your Money. Paul has an interesting topic in this. What are you going to do with your tax refund? Paul, I'm going to let you take it from there.
Well, it's that time
I'm
of year.
laughing because isn't the tax refund going to change? What you think you're supposed to get back is going to be possibly less. So
It's between you and your accountant. I don't know what you're going to get, Ron, but we'll
Okay.
wait and see. It's that time of year. We're getting tax documents in, and appointments are scheduled with our tax preparers. And if you get a refund, hopefully you get one, Ron, this year, what are you going to do with it? So that's what we're going to talk about today.
I'm going to save it.
I think you should take your wife out for a nice dinner if you get a refund.
Well, not only that, we're going to plan a trip.
There you go. Bring the grandkids, too.
Okay.
So, the average refund last year in 2022, that was for the 21 tax year, was about $3,176 on average for individual income taxpayers. That was according to the IRS. Now, if you expect to receive a tax refund in 2023 after you file your 22 tax return, will you save it or will you spend it? Now, while you may be tempted to indulge, consider using the money to solidify your long-term financial position. No matter your stage in life or the size of your refund, there are ways you can use it to help reach your current and future financial goals. So here's a few we're going to talk about today. So for people starting out in their careers, potentially add to your emergency fund. Consider having enough to have the equivalent of at least 3 to 6 months worth of income in an emergency fund. Now this could come in handy if you experience a sudden interruption to your income or a major unexpected expense. Something else to consider is paying off your student loans. If you are carrying college debt or other loans, applying your refund to the balance can help reduce the total interest you pay or eliminate the debt entirely. Once you pay off your loans, allocate the amount you spent each month on student loans to another financial goal to keep building towards your financial foundation. Something else to consider, invest in an IRA. Think about starting a habit of investing your tax refund each year into an IRA, where any earnings can accumulate on a tax-deferred basis. While you are limited to contributing $6,500 annually, and that's $7,500 for those who are age 50 and older, the savings can add up. So, for example, investing a $3,000 refund each year, if you did it from age 26 to age 65, and let's say you earned 7% annually, that would build that money to more than $640,000. So that power of compounding is evident in those numbers. Now let's change gears and look for those people who are just starting families, what they might want to do with their refund. Number one, consider save for a down payment on a home. A tax refund can be a meaningful impact as you accumulate enough to purchase your first home. Consider saving enough to cover at least 20% of the home's value. Doing so may eliminate the need for private mortgage insurance, which will cost you extra in interest payments. Second thing to consider is start or add to a college fund for your children. With the cost of higher education continuing to rise, starting early and saving often can help you make funding tuition a reality. Certain options may provide tax advantages, so work with your financial and tax professionals to find the best strategy for you. And the third option to consider is invest your refund. Consider adding your refund to your portfolio, using it to accelerate progress towards your long-term goals. Your refund could be used to purchase stocks, bonds, mutual funds, or other investments that are aligned with your goals, risk tolerance, and time horizon. Fourth consideration could be create or update your legacy plan. So developing a will, trust, or other estate documents is important so that your wishes are clear in the event of your death. If you need to create or update legal matters, use your refund as a reason to take the next step. Now, the last category of people we're going to look at is for those who have a solid financial foundation already in place. So a few things to consider. Consideration number one, apply this refund to home improvements. So if you're planning to remodel your home, you may want to use the money to fund specific upgrades or to keep as a contingency fund throughout the project. Consideration number two, save for starting a new business. So if you want your own business now or in retirement, the refund can provide a cash buffer to help you get started. It can either replace some of your regular income or be used to fund expenditures required to get the business up and running. I'm sorry, I forgot about those retirees at home. Let's talk about them and what they should do. Consideration one, increase your retirement savings. So as your retirement date and goals get clearer, maximizing your retirement savings should take priority. Your refund can help you make an additional investment towards your financial future. If you are 50 years or older and have earned income, current tax laws allow you to invest extra dollars in your IRA and workplace retirement plan. Work with your tax professional to learn about the opportunities and limitations that apply to your situation. You could consider paying down your mortgage. Consider your refund to make an additional principal payment to your home mortgage. Erasing prior debt to retirement can maximize a major financial burden. And once you're retired altogether, maybe spend it on your retirement dream. If you plan to travel or pursue a hobby in retirement, use the refund as a trigger to make it happen. Allow yourself to spend the money without guilt. After all, you've earned and planned for this opportunity. Think about a Roth IRA. If you have any earned income that allows you to make retirement contributions, your tax refund may likely or can likely be placed into a Roth IRA. This vehicle provides potential tax-free growth of any earnings. Just review that with your tax preparer to make sure you can contribute to a Roth. You might want to look into paying healthcare expenses. With today's rising healthcare costs are often one of the biggest expenses for retirees. Consider applying the funds to Medicare or long-term care policy premiums. If your healthcare expenses are manageable, save the refund to pay for future expenses. You need to review your tax withholding if you regularly receive a large tax refund. You may want to adjust the withholding on your paycheck. Decreasing your refund may increase your monthly net pay, allowing you to allocate extra income each month to your financial goals. Now, this strategy isn't right for everyone, so as always, consult with your financial and tax professional and financial advisor before making any adjustments on or deciding how to manage your refund.
Key things you had mentioned. Talk to your financial advisor and your tax consultant to guide you properly through this whole process.
That's what these people are here for, to help guide you through times like this. I spit out a lot of different things to consider. They obviously are not right for everyone,
Right.
and that's where you need extra guidance to figure out which one, fits your needs.
Right. Paul, if a viewer would like to maybe talk to you, do you have a phone number that they could contact you on?
Absolutely. Call me directly at 708-226-3412.
Thanks, Paul. That's a very, very good topic, proper in timing, and we will hopefully take your guidance on this whole thing. For Paul Munical with Ameriprise Financial, myself, Ron Jankowski with Channel 4 and Paler Sites, we wish you good investment day.